Starting a new venture or expanding your existing one often means navigating a maze of tax choices. One concept that comes up frequently is the S corporation designation, often shortened to S Corp. If you've heard the term but aren't clear on what it entails or when it's a fit, this overview should clarify things. It sheds light on what an S Corp actually is, how it can benefit your business, and when the timing makes sense for an election. An S Corp isn't a business structure like an LLC or corporation itself. Rather, it's a way to treat certain types of legal entities for tax purposes. Specifically, an S Corp results from a choice made under the Internal Revenue Code, allowing a business to file as an S corporation. In effect, the IRS treats your LLC or other qualifying entity as an S Corp if you opt for that classification. Why might an owner prefer this? The main appeal lies in potential savings on employment taxes. For sole proprietors or owners of multi-member LLCs, income is typically taxed as if earned directly by them, which means they're liable for self-employment taxes on the full amount. When an LLC elects to be taxed as an S Corp, income is considered in two parts: a salary for work performed and distributions of profits. The key benefit? Only the salary is subject to employment taxes, not the distributions, which are taxed differently. This setup can lower your employment tax bill significantly. Here's how it works. If you own an LLC taxed as an S Corp and work in the business, you're both an employee and an owner. You pay employment taxes only on your salary, not on the distributions. So, with a bit of planning, this can lead to noticeable savings. But it's not a decision to be taken lightly. Electing S Corp status involves some upfront and ongoing costs. You'll need to adjust your operating agreements to align with S Corp rules. These rules limit you to one class of stock, for example. You'll also have to formalize payroll procedures, handle Social Security and Medicare contributions, and set aside money for taxes like unemployment. Timing matters too. For a single-member LLC with a reasonable salary, say $60,000, your business likely needs to make at least $76,000 in income before the tax benefits outweigh the costs. Why? Because employment tax savings accrue once your income surpasses certain thresholds, making the election worthwhile after a solid profit level. Determining a reasonable salary becomes an important aspect here. The IRS expects your salary to reflect what an outsider would earn for similar work. Too low, and you risk penalties. Too high, and the savings diminish. Various rules of thumb exist: the 50-50 split or the 60-40 split of income into salary and distributions, but they aren't one size fits all. Business size, cash flow, industry standards, and individual circumstances all influence what's appropriate. Another point to consider: you don't have to pay yourself a salary unless you want to withdraw money from the business. If your LLC has enough resources, paying yourself a reasonable salary while leaving additional funds in the business can be advantageous. Conversely, if your income is still growing, it might be better to delay electing S Corp status until profits are sufficient to make the tax savings meaningful. In the end, choosing S Corp status hinges on your business's income level, future plans, and administrative readiness. It's a strategic call. For some, it makes sense to keep things simple for now. For others, the potential tax benefits make the extra steps worthwhile. If you're unsure about timing or how to implement these changes, talking to financial or legal specialists can help clarify the best course and handle the necessary filings like Form 2553. Remember, while the mechanics are manageable, proper planning ensures you don't run into IRS complications down the line. We've covered the essentials: what an S Corp is, how it offers tax advantages, and when it generally makes sense to elect this classification. Navigating this decision can be complex, but with the right guidance, it's a smart move to consider as your business grows. If you've got questions or want to explore how to make this work for your business, feel free to reach out to Filing Fox at info@filingfox.com. We're here to help clear the path forward so you can focus on building what's next.